There's a quote that's really relevant to this episode, and it is this: always plan ahead. It wasn't raining when Noah built the ark. When is planning a bad idea? Well, I say never, and my guest today agrees. She's an accountant and tax advisor to doctors and dentists, and she's going to tell us why not just tax planning, but year-round tax planning is such a critically important exercise to go through. I'm Carl White, principal at Mark Advisory Group, which is a healthcare marketing agency, and I'm also the host of Practice Care. And the mission for both is the same, and that's to help private practice owners stay private. Not only is that what they want, but care is better when the provider owns the practice, because that's when they're going to have the most freedom to make the clinical decisions they think are best. It's just a little different when somebody else owns the practice, because eventually their agenda starts to creep in. And usually, at least, it's more for the providers to think about. Let's just keep it simple and keep it private to begin with. My guest today is Alexis Gallati. Alexis is the founder and lead tax strategist at Cerebral Tax Advisors and Cerebral Wealth Academy, and she's the author of the book Advanced Tax Planning for Medical Professionals. She has over 20 years of experience in high-level strategic tax planning and multi-state tax preparation, and she's trained at the highest level, herself holding 2 master's degrees. Alexis grew up in a family of physicians and is married to a private practice physician. That's why she understands how hard medical professionals work to get where they are, and why she provides simple and accessible tax solutions tailored to busy physicians. Alexis, thank you for coming on Practice Care.
Thank you so much, Carl. I'm excited to be here.
I think this is going to be, me too, like a quiet giant of an episode. I who thinks of taxes and planning unless they need to. Those are not very popular
Sure.
topics together, and we're asking to combine them into one. But the value is there. I just went through an experience myself, I was telling you, where year-round planning would have been better than just year-end planning, having literally just gone through it earlier this week. So this couldn't be a better time to, maybe I'll be the only one to learn something. We'll find out. I doubt it. But let me start with you where I start with everyone. Your bio was short. Help us get to know you a bit better. Fill in all the gaps.
So I started in taxation when I did my undergraduate in accounting and finance. I double majored in that, and I really found a love, sounds so weird, for tax.
The world needs you, Alexis.
School.
The world needs people to do something of everything, right? So
exactly, yeah. Well, as you mentioned a moment ago, I grew up in a family of physicians. My father's a neurologist, my aunt is infectious disease, my uncle's pathologist. And my brother was working towards going to medical school as well. And for some reason, I didn't get that science gene.
Okay.
My brain is definitely geared more towards the law and et cetera. But yeah, so I went to graduate school and did my MBA, my master's of taxation. And I also did a 3-year fellowship in IRS representation. So knowing, how the IRS works and how to make them happy, basically, and also stick up for the taxpayer as well.
Right.
But yeah, so I worked for local and regional CPA firms for about 12 to 13 years before going out on my own. And so it was actually a couple of years before my husband finished his residency. He's a neurosurgeon. We live here in the Knoxville, Tennessee area.
Okay.
But he did his residency up in New York State.
Okay.
And when I saw the writing on the wall, like we were, a couple of years out from him finishing. We also lived in New York. It was such high tax. And so we knew that we were going to be hitting a really large tax bracket. And so I was like, well, how are the, Warren Buffett's and the Bill Gates of the world getting this, 10%, 15% tax bracket?
Yes.
How can I do that?
Yeah.
So Cerebral was born really out of that experience, and that from knowing how to prepare returns, but then into investigating how to save money and keep more of my own money, not only from the IRS, but the state as well. So of course, the first thing that we do was we moved to Tennessee, where there's no state income tax. So that saved a lot of money.
Yeah.
And
it's New York State's like 10-something%, right? I'm from New York State.
Exactly. Yeah. And the property taxes are insane as well. So here it's a lot more reasonable. We have a really high sales tax in Tennessee. It's about 9.5%, give or take. But that's okay. That's a consumer tax. You technically have control over that. So, but yeah, and a lot of, like you mentioned, I work with primarily healthcare professionals.
Mhm.
And that just kind of came organically from the circle that we hung out with.
Mhm.
And the fact too, that we have basically almost the same scenarios as my clients do. And so I'm
Nice.
doing myself a lot of the same strategies that my clients are doing. We're in similar brackets, et cetera. So a lot of our clients came to me because I've had
Yeah.
all this almost firsthand experience.
Yeah.
Not almost, it is firsthand. Um, so yeah, that's really how Cerebral was born. My husband helped me name Cerebral when it came, so it was very fitting with him being a neurosurgeon,
Yeah. I
my
was just going to
father
say,
being a
yeah.
neurologist. Yeah, and so that was really fun exercise with him.
Yeah. Yeah.
But yeah, so and I really found too, when starting my practice, that I wanted to be proactive, because a lot of the tax strategies that you can implement have to be done during the year to actually take advantage of them. There
Hmm.
are a few you can do after year end,
Hmm.
but really, the sooner you start planning,
Hmm.
the more tax you're going to be able to save.
Yeah. And so I'm curious. So were you working with doctors and dentists, like doctors and such, primarily before Cerebral as well, or that started with Cerebral?
I had a few in some of the local and regional CPA firms I was working for,
Yeah.
but but it wasn't majority. It was a
Okay.
good mixture of different industries.
Yeah. Yeah. Okay. So let's get into planning. So with your clients, is it a planning throughout the year? So is that like quarterly? Does it matter? It's like, what's a good cadence that you find?
Yes. So if you have a business, we want to meet with you at minimum twice a year. So usually in the spring, we'll prepare tax returns. The May, June timeframe, we're doing a mid-year tax projection.
Hmm.
And then October, November timeframe, we're doing a year-end projection. So
Okay.
that allows us to tweak and modify our clients' tax plans as their situation changes or tax law changes,
Hmm.
so they can in effect be tax optimized at least a couple times during the year.
Right.
We do have some clients that will be on a quarterly basis, just because their business is just a lot more involved, or it's larger, and it needs that little bit extra,
Right.
basically.
Okay. And what does good tax planning look like? We've got some of the timings down, but what does good look like? Where it's all foreign to us, except for you.
Yeah.
So, what does it look like?
Well, my ideal is trying to get you to owe nothing and get a refund back of nothing on your tax return. So that sounds kind of weird, but if you do a great job,
Hmm.
you're not owing anything or getting a refund. And that's because you've planned so well during the year
Hmm.
that you can make that result.
Hmm.
But also too, it's going and taking working with someone, or even yourself, looking online and doing research, to find strategies that will help lower your liability. And a lot of people sometimes will even just not go and do the basic strategies.
Really?
Like they'll not write off their CME, for example, and it's like, well, that's a deductible. And obviously it depends on the person's situation as well.
Okay.
And so like if you're a W-2, then you can't write it off, but what you can try to do is have your employer cover it. And a lot of times they do, they'll have a stipend amount, but it depends on
Yeah.
um, the reimbursement policies, et cetera, if you're just strictly W-2.
Okay. So what are some good, like some common tax strategies, like, some of the stories? Like what are some common, tax savings you find, particularly the ones that you think
Mhm.
other accountants seem to miss? I mean, and I just want
Yeah.
to say here, I've said this from time to time. Sorry to cut you off before we even got started.
Okay.
Listeners, what you're about to hear is another reason why, if you own a practice, you need to find healthcare specialists in whatever domain you're thinking of, whether it's accounting, marketing, legal, whatever, because I'm sure, I don't know yet, but Alexis is going to give some examples that unless you're knee deep in medical and dental and whatever, you're probably going to miss some of these things. You just like the depth of knowledge matters, the experience matters. So you're hunting around for advice, find healthcare whatever in front of it, healthcare attorney, healthcare accountant, because it's gonna make a better difference. So Alexis, sorry to cut you off, but yeah, give us
Yeah,
some
no
examples.
worries. I love that PSA. Um So it sounds so simple, but the number of times clients come to me or taxpayers come to me and they haven't maximized their retirement. Like whether you're W-2 or you have your own business,
Hmm.
maximizing your retirement is such a low hanging fruit when it comes to tax savings.
Okay.
And what I've actually found, so like, let's say if you're just W-2 and you're not maxing out your retirement, that, and there's a match that your employer provides,
Right.
that's free money you're missing out on.
Hmm.
Even more when you have your own business and you have your own retirement plan, the number of advisors that recommend like SEP IRAs or simple IRAs, it like they just automatically go to that, as opposed to doing like a 401k that will allow you to do a backdoor Roth. And it actually allows you to do an employee contribution and an employer contribution, where the other two are like the SEP, for example, is just employer
Okay.
contributions.
Okay. And so why is it better to have the employee and employer versus the employer by itself?
You can do more. So with the SEP IRA, you only allowed to do the employer portion. So like, let's say an S corporation, you
Hmm.
can only do 25% of the W-2 that you've issued yourself.
Okay.
Where with a solo 401k, you can do a 20. So for this year, for 2023, it's 22,500. For 2024, it'll be 23,000 for the employee deferral.
Hmm.
Plus, you can do another 25% on top of that for the employer contribution. So there's two steps to it, and allows you to just put away a lot more, up to the maximum, which is 66,000 for 2023, and then 69,000 for 2024.
Okay. Okay. And then you mentioned like, getting, continuing education, credits, the cost of those deducted. Are there other examples of, expenses that, providers incur that they just don't, oh my God, I can deduct that can help me on my taxes? Are there other examples like that?
Yes, things like if you buy small equipment like loops, for example, that's anything, basically anything that is business related, and
Hmm.
you can tie a business purpose to it. The IRS, all they're looking for is that it has it's considered ordinary and necessary to do your job. So
Okay.
if you can meet that definition, then you can write it off.
Okay.
Um, Another one that I really love that a lot of other accountants tend to shy away from is the home office deduction.
Mm.
And that's because, I don't know, there's a rumor going around like a long time ago that it's a high audit risk. And the thing is that that's not necessarily the case. In a few years ago, this is many years ago, I'd say decades ago, there was a little bit more abuse with it. People weren't doing it properly.
You could
But
definitely overestimate the square footage and everything if you're sort of, right? Yeah. I mean,
not, yeah, I mean, you can correct it. But the thing is that it's just like, if you want to write off a charitable deduction, if I go and donate $250 to my church,
mhm,
I have to have a receipt for that $250.
right.
Otherwise, the IRS can deduct it or deny it. Sorry.
Yeah.
But with the home office, as long as it's legitimate,
Hmm.
like you have it set up and that you use it for business and you follow all the rules, then it's not an issue at all.
Right.
But the number of taxpayers that have come to me and said, yeah, my accountant won't let me do that because he says it's an audit risk is mind blowing. I'd say, I mean, at least 30% of my clients have come to me prior with that notion.
And is their office like their primary office, or it's like the office they work primarily out of?
So with a home office, you can have like if you have a clinic, for example, or that
Hmm.
you see patients in, but as you can have your home office set up, and if you're doing your administrative work from there, you can still establish it as your home
Oh,
office
okay.
as well.
I got it.
Yeah. And
I
so I
guess
have some clients, oh, sorry, go fast. I
no.
have some clients that will have their home office or, but they'll be looking at images at home, or
Mm,
they have to be, if they're on call, like if they're doing locum work, for example,
mhm,
and they're able to look at, everything from their home, then
mhm.
it's a completely
Yeah,
legitimate
that's legit. Yeah.
use of it.
It's funny. It's an audit risk. Isn't anything theoretically an audit risk? I mean, wouldn't
Well,
anything?
there are definitely areas that the IRS looks at more. Like
Yeah.
a Schedule C sole proprietorship has a higher audit risk than an S corporation.
Yeah.
So, and also too, like meals. People love to go crazy on meals. I'm a bit more conservative when
Okay.
I'm doing recommendations, and that's just because if the IRS sees that one year you have $10,000 and then the next year you have $50,000, that's going to raise some red flags.
Right. Right.
So
You look the same,
what I
sir.
would,
Why'd you eat that much? Yeah.
yeah, my theory or my philosophy, I should say, with any sort of deduction is that you want to be smart and not greedy.
Okay. Is that like a judgment call where the line is between those two?
Yeah, it's what you feel comfortable with. And so if I'm looking at a client's books and I see something that looks a little funny, I'm going to ask them about it,
Mm-hmm.
and we might tweak it a little bit, to make sure that it's, I can't ever guarantee that you're not going to get audited, because
Sure.
you can just get a random audit one time.
Right.
But we at least want to set you up then that way, if you do get audited, it's a as painless as possible process. But we want to handle everything for our clients anyway.
Yeah.
That's why we have
Yeah.
audit protection in all
Right.
of our packages, because I don't want you saying something wrong to the IRS. So
Yeah.
well.
I can't even imagine feeling I'm afraid to say hello. Like that could be wrong somehow, you know?
Yeah.
Yeah.
I can see that.
Yeah. Um, okay. So home office, there's an area of opportunity that,
Mhm.
you don't see nearly enough taking advantage of. Um, CMEs, retirement, any other areas where you see, just people not catching things that they should?
Yeah. Another one of my favorite deductions is hiring family, whether it's your children or if you have a parent that you support.
Hmm?
Hiring a child, the court tested age is 7. And so, as like with my boys, I have 4 children, and my 3 oldest are all over the age of 7,
Hmm.
and they work for Cerebral. So they're
Okay.
doing things like um, shredding paper, stamping envelopes, cleaning my office. They do a whole bunch of more admin-y type of tasks, things that are appropriate for their age.
Hmm.
And I can take their salary as a deduction for my business.
Hmm.
And that moves that money from my higher tax bracket to their 0 tax bracket. So for 2023, for example, you can pay a single person $13,850 or less, and they pay 0 tax on it. For
Hmm.
2024, it's 14,600.
Hmm.
So if you can shift that money from your higher bracket to their non-existent bracket,
Hmm.
then you're saving money. And so you just have to make sure that they have a legitimate job in your business,
Sure.
that they're set up as an employee,
Yeah.
and so they're running, it's actually payroll. You don't want to run them as 1099 independent contractors. And then you have to have a timesheet for them, et cetera. And so if you do that properly, you're able to then move that money into their Roth IRA and help save for their retirement
Hmm. Your seven
or
year
pay
old
for
has a
any other
Roth IRA.
expenses.
Your 7-year-olds have a
Yes, they
Roth IRA.
do.
It's awesome.
Yes.
That's all with like
Yeah.
70 years to compound or whatever.
Exactly. Like if you
Yeah.
only did it for a 10-year period until they turned 18, and you just don't tell them about it and they leave it alone, then
Yeah.
by the time that they hit in their mid 60s, I mean, they're going to easily have $2 million of money that they can take out tax free.
Yeah. Oh my God, I love it.
Yeah.
Yeah.
It's a favorite one.
Yeah, that's a good one. It's hard to beat that one. What else? What other any I don't want to cut you off. What other examples, any other examples you have of just cool tax breaks, or just not tech, but just things to keep in mind?
Yeah, another one that I love is that's definitely applicable to like locum tenens or anybody that does work over 50 miles away from their primary residence,
Okay.
is the per diem rules. And so this is in relation to lodging and then food when you food and incidentals when you travel away from home. So it has to be over 50 miles away.
Okay.
And it's basically a standard amount for the lodging or the food that you take per day while you're away from home. And so if, in general, like for food, I believe at the moment you can go to gsa.gov
Okay.
and you'll see all or you can just even Google per diem rates and that gsa.gov will pop up. But you can go and take a look. And I think the standard amount for this year is like $59 for food and incidentals. So if you go away and you spend, let's say, $30 on food, then you can actually take the per diem amount of $59 and you've just created additional $29 of expense that you didn't have to actually pay for, because you can take the standard amount over the actual amount.
And then you deduct that.
And then you can deduct that.
That's a business
exactly.
expense. Wow.
Yep.
Okay.
So you can't take the actual as well. You have to take one or the other. So usually what I say is, go on the trip, and then you kind of want to see which one's higher and then take whichever one's higher.
Okay. That's cool. So, and you can't take higher than whatever the max is, right? So you can take up to it, but not to exceed it.
Yeah. So, well, if you spend, if the standard, the per diem amount is $59 and you spend $70, then you can take $70.
Oh, you can.
Which is
I thought you couldn't.
Yes.
I thought you couldn't take more than 59.
Yeah, it's whichever one's higher.
Oh. Okay.
Yeah.
But still reasonable. Like, right? How'd you say it before? Be smart but not greedy. Yeah.
Exactly.
Yeah. Okay. Yeah. Be smart, but don't get no fillets for lunch every day, please.
Well, you can if you want, but you're most likely going to end up actually spending that money, as opposed to getting a deduction that you didn't have to pay for.
Got it. So the value is staying below the max because you can capture the difference.
Exactly.
Got it.
Yep.
Okay. That's a cool one. All right. What else you got?
Well, I guess one last one. I love the HSA, the health savings account.
Yes, me too.
Yeah, if you're eligible for it, you have that high deductible plan. And the best thing to do is to go online, and because it changes every year what's considered a high deductible plan. But if you're able to, contribute to it, then the money goes into the HSA tax-free. It grows tax-free and then comes out tax-free if you use it for qualified medical expenses. And there's some cool planning that you can do around it where you can actually, so one neat thing about the HSA is you don't have to use that money up every year like you do with the flexible spending account or FSA. So like one thing that I do and a lot of my clients do is they go and hold on to the receipts. So they're actually paying for all of your medical expenses out of pocket. And this includes vision and dental as well. And you can hold on to those receipts and then put the money in, let it grow. There's a lot of HSAs that will allow you to invest those funds. So like into ETFs or anything else you want to do that they have available. And then you hold on to those receipts, and then in like 30 years, you can actually submit the receipts and then take the money out when you actually want to use it. But that gives that HSA time to grow. And if you need to take out any funds for anything other than qualified medical expenses, it acts just like an IRA, where it's just taxed at the tax rate that, in the year that you, at the rate that you take it out.
Right. We do this. And yes, I keep receipts. I've got, I don't know, 6 years worth of receipts, because one day, when I want to start using it, exactly what you said. It's the easiest. I don't know. It's about the easiest thing on earth, but you have to have a high deduct. You got to qualify. The plan, the health plan's got to be there. But yes, listeners, please sign up for it. And we have the high deductible health plan. Don't get scared by the term high deductible. We find that deductibles aren't terribly different from the other plan options that were available to us when we chose. I suppose if you really consume lots and lots of healthcare every year, maybe it's not so, but whatever. But if you don't go to the doctor all that often, it doesn't really matter how big the deductible is, because you're not going to use a lot of it. So it's really, really good. Anyway, so there's my plug. I'm testimony here. Yeah,
same here.
Right. So cool. So I'm sure you could come up with like dozens of other really, really cool tax ideas. And really, I guess the reason to plan, have, year-round planning, is to make sure that you're capturing these, that your accountant is aware of them, your accountant can remind you of them. Do you ever ask your clients, any travel coming up? Any CMEs coming up? Hey, don't forget, keep the receipts. Could it be as simple as that, like the value of planning?
Yes, and that's where I really built Cerebral around great communication and
Mm.
lots of reminders and hand holding for our
Yes.
clients.
Yes.
And so that's one big difference between Cerebral and a lot of other firms, is that we're white glove.
Yeah.
And so we are babying you throughout the process, because we want to make sure that when we recommend a strategy to you, that it's being done properly,
Mhm.
and that it's being recorded properly, like you're saving the right receipts, and that you're doing things at the proper time, et cetera. So yeah, we send lots and lots of reminders to our clients, so then that way
Yeah.
we make sure that they actually do it. If they don't do it, then we say, well, yeah, we reminded you, but
Right. Right.
we can still try to take it for next year.
Right. And your sister company's Cerebral Tax Reminders. Yes.
Yeah,
um,
exactly.
so in the interest of kind of, keeping us at more bite-sized advice, a couple of wrap-up questions I ask every guest. The first one is there anything you think I should have asked you, but I just didn't think to ask you?
Yeah. Well, it would be great to talk about, how to choose an advisor, and whether you think that you might even need an advisor.
Mm-hmm.
I have a lot of, I've had some taxpayers and physicians come to me, and, they really didn't necessarily need an advisor, because they were just strictly W-2.
Okay.
And, they might need to just go into some, investment type strategies in order to help lower their liability.
Yeah.
But it depends on, also too, if some people just don't want to do their taxes, and I
Mm-hmm.
get that.
Mm-hmm.
I don't want to do my own medical exams, or,
Yeah.
try to diagnose that sort of
Yeah.
stuff. But yeah, obviously it's based off of, experience, off of education, the licensing, really how proactive they are. You want to try to find someone that's, like Cerebral, where we're working with people throughout the year.
Mm-hmm.
A lot of other advisors, they're just doing the tax returns, and they're
Mm-hmm.
maybe talking to you once a year. So,
Mm-hmm.
and that's completely fine. There's a lot of, there are people out there that would be right for that. But I find, especially if you own your own business,
Yeah.
or even if you have real estate, you want to work with someone that's within the laws, especially because that's how Congress keeps me going. They're
Yeah.
changing things all the time.
Yes. The Accounting Full Employment Act. Yes.
Exactly.
Yeah.
And then, but yeah, and then as I mentioned before, whether or not if you just want a tax return done, or if you want more white glove service. So it's kind of those spectrums.
Got it. Got it. Cool. And then the other question I ask is, so we've caught, listeners' attention, and they're like, she's right. I should start planning. Sometimes people get really enthusiastic about starting something, but they don't know where to start. And so if you had to give one or two pieces of really simple, practical things they could do, whether it's switching advisors or starting with it, what would you recommend they do to get off the starting line and go down the path of planning at
Yeah.
all or better?
Yep. I recommend just starting to build up your education. And that's a big cornerstone of Cerebral, is educating our clients, because we don't sell any products, we don't get any commissions or kickbacks.
Mm-hmm.
So everything is really around that education. And you can there's really great groups out there, and that it's physician specific, that like Facebook groups and forums, et cetera, that allow people to really learn. So learning is probably the number one thing.
Yeah.
When it comes to strategies you can do right away, go and research that home office. Go and look at doing the hiring the kids. Like, go back
Mm-hmm.
and listen to this podcast, and some of the ideas that we discussed.
Yeah.
All of those things are really simple enough to start implementing right away.
Yeah.
And so I love just hearing that people are starting to be proactive and
Yeah.
working on their situation, because you can't save money unless you actually start doing the work.
And if you're aware of it. Yeah. I mean, I would, just to play off of what you said. So let's say you read about the home office deduction, and then you sit back and you go, am I getting that? And if you're not sure and you're using an accountant, Step one, ask your accountant. And you might want to ask them, so if you're thinking of switching, what does planning look like for you? And you want to hear, I'd say, more on the activist side rather than the passive side, because especially if you're a practice owner, there's so many moving pieces. You eventually you got to turn it over to somebody else because there's just too much to keep track of on top of your full-time job. You could also ask any of your colleagues, do you plan with your accountant? What does it look like? Are you glad you do it? Do they find you any money compared to before? And you're probably going to hear, yes, I like it, it's worth it. You got to start to wonder why you're not, because you're probably leaving real money on the table, and you should pay what you owe,
100%.
but not more, right? So stay on the smart side, not greedy. But then there's dumb. I guess there's dumb, smart, and greedy, right? So don't be on the don't be on the dumb end of the spectrum. Don't take that personally, but you know what I mean. So just It's your money, so try to keep as much of it as you can. Alexis, thank you very much. Thanks for coming on Practice Care, shedding light on this. We've had a couple of other accounting guests on before, but we haven't talked about the planning so much. And so I'm glad that we were able to bring this to light because it really is a year-round thing, I think. So thank you so much for coming on.
Yeah, thank you so much, Carl. I really appreciate being here.
Yeah, you got it. And a couple of points before we wrap up. First, if you're someone like Alexis or us, you serve private practice owners and you've got experience on the business side of private practice that you want to share, or if you're a private practice owner yourself, also, you figured out something on the business side that you think others would benefit from, either way, we want you to come on Practice Care and tell the world about it. In the show notes for Alexis's episode and every episode, there's a link, a couple of clicks, tell us what's on your mind so we can get you scheduled as soon as possible. And finally, subscribe to Practice Care. We do a new episode every week, and the easiest and best way to stay up to date is to subscribe because then you'll get notified. We're on Apple, Spotify, Google, YouTube, all the platforms, all the players. Subscribe, search for Practice Care, one word. You'll find us, subscribe, and you're all set. Thanks very much, and until next time.